What is going on, guys? Welcome back to another video. I'm going to show you guys how you can make minimum $5,000 to $10,000 every single month running the wheel strategy on Palantir. This works on loads of stocks as well. I've covered, I think, in a video on my channel if you guys want to check out that video. But this is how it's going to work. Let's get straight into it. I've made a PowerPoint for you guys just to make explaining things a bit easier for those people who have never heard of the wheel strategy before. So we'll just run through that quickly. And if you have heard about it already, then that's great. You're obviously a league ahead. How am I going to get my face back on here? Okay, my face has disappeared, but that's not to worry. Let's just make this a bit smaller, like this. And I can make this all a bit wider. Okay, and I'll zoom in as well, so it's a bit easier. There we go. I hope everyone can see that perfectly fine. So yeah, the wheel strategy explained. So here we go. What is the wheel strategy? Well, the wheel strategy is an options trading strategy that involves 3 key steps. Selling a cash secured put to potentially buy a stock at a discount. So that's when, say for example, Palantir is 130. You're saying after 30 days, you're happy to buy it at $120 if it's below that 120 level. So you obviously get it at a discount rather than buying it straight away at 130. You're saying 120 and you get paid a little premium for that. If assigned, holding the stock and selling covered calls to generate income. So this means if you got assigned at the 120 level, you can sell a covered call at say 130 and collect a premium for that. And that's just because you're saying if after 30 days or more, if the price is above $130, you're happy selling your shares at 130. But that doesn't matter because we're doing this for income. So we're getting the premium and the capital appreciation in that covered call. And here, number 3 is repeat the cycle for regular income and growth, because you just wheel and wheel and wheel. It goes from cash secured put to the premium to getting assigned to the covered call to selling the shares and doing it again. So it's a big wheel. So here we go. A cash secured put is a type of put option where the seller has enough cash in their account to buy the stock if assigned. This strategy allows you to collect premium from selling puts like we covered, buy a stock at a potentially discounted price. In my opinion, if it's a stock you want to hold, it's always going to be a discounted price because you know that you're happy buying it today, but you're delaying that day by 30 days to get it at a cheaper price. That's the way I think about it. If I'm happy buying a stock like ASTS Space Mobile today for $28, in 30 days I'm more than happy owning it for $25 if we do come down to that level. That's where I look at it. So there's never any negative downside for myself because I'm happy owning the stock for the long term. So then you buy a stock at a discounted price. And number 3, be prepared to buy the stock if it falls below the strike price. In my last video, I showed how crucial this is. Let me get that up for you guys. So guys, in this video right here, options trading, in one, oh no, not that one. Then the NVIDIA one, I showed just how crucial this strategy is, okay? Because look, let's get this going. Let me mute it so we're not echoing. And look, I actually did it on pages. Here we go. I showed how crucial it is to actually get assigned your shares. So people get so scared of getting assigned their shares, but it is so important that you are happy and comfortable getting assigned your shares because you make so much more money with the covered calls, okay? Check this video out, guys. Trust me, you're not gonna be disappointed. You're gonna absolutely love it because it makes so much sense. Just to go deeper into the whole process, really. And I'll try and do the same right now with Palantir, but do check that video out. Okay, let's get straight back to it. So now let's go towards the covered call. A covered call involves selling call options on stocks you already own. This strategy helps you, 1, generate income by collecting premiums from selling calls, and number 2, potentially selling the stock at a higher price if the call is exercised. So that's when I said to you, you bought it at 120, you got assigned at 120. You're happy saying, in 30 days, I'm going to sell it for 130. If it's above 130, you sell at 130. And there you go, you collect that capital appreciation and that premium that you took at the start 30 days ago. So obviously, you're happy, you're in the money. And then number 3, create additional income source for long term because you're continuously doing it. The benefits, number 1, it generates consistent income through premiums. That's why I like it. Number 2, it reduces the cost of buying stocks through put premiums. So for example, you're saying you're happy buying the stock at $120 for Palantir. It's currently $130. For that, they're going to pay you $4 per contract. Okay? So that means that you're technically not buying for $120 because you have to minus that $4. You're buying for $116. Okay? So that premium actually lowers your cost basis. And I'll try and show you that the best I can. Number 3, helps you build long-term wealth and create passive income. And number 4, it works well in a sideways or slightly bullish market. And just for anyone out there thinking that I'm just saying this, I don't do it myself, I'm on a road to 500k. I'm actually thinking about making a video. This is how I keep track. This is only the past since the 22nd of May, but mainly since the 27th of May. So 6 trading days, and I am up a total. I'm not going to count the 22nd, and I'm up a total of, I believe, $15,144. So I do this myself, and I take notes of everything that I've done. So yeah, I'm speaking from experience here. This is not just me trying to explain options trading to you guys. This is literally what I do. So let's get into it now. Palantir. So what can we see? Daily chart, brilliant. 3 EMAs, nice bullish trend going up. So I only use these 3 EMAs. I do have resistance as well that I tend to put on my chart. I just haven't put it on this chart. You can kind of see here, strong resistance was right here, flipped as support. And we did actually come back down to retest this level yesterday, and we actually continue to bounce off it. That is a good move. That shows upwards momentum. Okay, I've actually been a funded trader as well. If you guys know prop firms like foreign exchange, I actually am a funded trader. So my TA is, in my opinion, it's quite good. So I'm confident with it anyway, is what I'm trying to say to you guys. So you can kind of see here, when we do have these moves like this, we have parabolic moves upwards, come down slightly, parabolic moves upwards, come down, okay, hang around the EMA. This is the April 7th low, and then we tend to go up. And that's what happened. So now, are we in track for a new run? Well, I think so. And what do I think? What can I see clearly right here? I can see anywhere below this green box is a safe place to put our cash secured put, our strike price. Okay, so why is that? Well, we're below all these key support zones right here, strong zones. We're below our 10 EMA, our 20 EMA, and we're below another support zone. So now let's check out how much that would actually pay us if we did want to do a cash secured put on NVIDIA. And just for the video, we're going to use $100,000 and see where we can go from there. Okay, here we go. Okay, so Palantir, yep, $130. I'm going to go to $120 strike price. This is our put. You can see a put here, and we're selling a put. Okay, so let's see how many we need to get to $100,000. 9. Oh, so 9 takes us just over. Okay, so we're gonna have to go to 8. So we're gonna use $91,852. So we're gonna have $8,000 in our account doing nothing. So that's not the best scenario. But that extra $8,000, what we can do is we could just leave it in the account to get interest, because like IBKR, Interactive Brokers, pays interest on uninvested cash at about 3.92% per annum, which is quite good. It's quite good. Or we can use that on a different stock. Like we can go to a bit of a riskier play and put that $8,000 in there and maybe try to get $400 a month from it, which will be 5%. So yeah, we can try and work at different things. But you can see here, just on that $91,000, after 36 days, we would collect $3,720 in premium. Okay, and that is a safer strike price than buying at 130, and you're getting the free premium. So let me write this down for you guys. So let's go to my pages. Where's my pages? Here we go. So this is for my video yesterday, if you guys want to check that out as well. So here we go. Let's get rid of all of this. Palantir. Hopefully you guys can see that. Can I zoom in? I'll just make the writing bigger. There we go. Make it 40. That's good. Okay, so 120 strike, and we're collecting 3,720. So for $91,800, we're collecting 3,780. Or let's work that out as a percentage. So we're going to do 3,780 divided by 91,800. 4.1% per month. Annualized, 49.4% in 1 year. If that stays the same, if that keeps happening, if we're able to keep doing this. And that is a safer play. That is an under 30 delta. That is 27 delta. So that means there is a 27% chance that you will actually have to buy how many shares was it? 800 shares? Yeah, 800 shares of, let me write this down, 27% chance to buy 800 shares after the 36 days. And let me show you something else now, okay? We're going to go to a bit higher, $125, okay? Which, if we go to my chart, let's mark this up. This is still safe, guys. Horizontal line, 125, put to right there. That is still safer at our line, okay? There's high volume there. You can see high volume there. Came crashing down, so that's a high liquidity zone area. Same here, high liquidity zone area. We got above it, held, pumped back up. Same here, came down, pumped back up. High liquidity zone area is $125 for Palantir. So if we come to that level, it's likely we would see a bounce off that level, okay? So our chances of actually owning those shares after 30 days at 125, because we'll be below 125, is lower. So let's see how that would differ and how that would pay us differently. So you can see here, let's get rid of this, change to 8. So that's using a bit more because we're higher. We are now $5 per share higher, so it's costing us more, $94,000 instead of $91,800. But we're getting $5,240 more, okay? So let's write this down for you. So instead now, we're using 94, I think it was 94, what was it, 94,300. 94,300, we're getting 5,246, 5,246, which is, let's work this out, divided by 94,300, that's a 5.5%. Or 66.8% annualized. Okay? Now that is impeccable. If you consider the S&P 500 over the past 5 years, I believe, to have returned 71%, that could be slightly wrong, but for my mind, 71%. Okay? And you can do that in 1 year. And that is not out of the blue, by the way. I've done it on I've done it on single stocks. And just right now for the QQQ, I believe I'm up 1.8% in the week. So yeah, and that is way safer being it on the QQQ because it's a whole array of technology companies. So rather than just holding single stocks, it's a great way to just get diversified and still do options. But that's not what today's video is about. So we're going to stay on track. So now what would you do? Okay, so let's say you are sticking with the 125. You got assigned after 36 days. Basically, I would do 30 days, but you can see here, it's either saying 28 days right here or 36. And I wouldn't go under 30. I'd stay the closest one above 30, so 36 days. So you got assigned at $125. What now? Well, now we switch over, delete this. We go to the calls. You can see here the call side. We want to sell call. And let's say we want to sell a call at $135. Okay, so we got assigned at 125. We want to go to 135 now. So we go click, $135. 8, because we have 800 shares, and one contract is 100 shares. That's why I'm doing 8. That's 800 shares. So just for us saying, okay, we'll sell at $135. They're going to give us $5,840 for that month in premium, in cash, straight away, to spend wherever, buy some trainers, go out for a nice dinner, go on holiday, sit on the beach and still do this. Whatever you want to do, you can still do this. That's the great thing about it. One laptop, mobile phone, and you can still do your options. That's how great it is, especially with companies you want to hold. I can't stress that enough. I know I've said that about 4 times, but that's how important it is, guys. Let's go straight to my little word planner. So 5,840. Okay, so our CC, that's my covered call. So it's paying $5,840 for $135 strike. So that's us saying we're going to sell at $135 strike. Let's say after a month, we had to sell, okay? Unfortunately, we had to sell at $135. That's not unfortunately, I'm being sarcastic. That's brilliant, okay? Because why is that brilliant? We collected $5,840 in premium. And remember, we bought at 125 and we're selling at 135. What's that? It's $10, okay? $10 capital appreciation on every single share that we have. 8 contracts, 100 shares per contract, 800 shares. $10 capital appreciation. $8,000, guys, plus 5,840 premium. Should we work this out? 5,840 plus $8,000 capital appreciation from the share price. You bought at 125, you're selling at 135, equals $13,840. Oh, blimey. In 1 month. Let me just redo that. So let me pause it and redo that for you guys. There we go. $13,840 in 1 month. Okay. Divide that by our cost basis, which is $94,000, remember? Divided by $94,000. 13,840 divided by 94. 14.7% in 1 month. This is why I always say getting assigned is the best thing possible, especially if you like the stock. Times that by 12, 176% annualized. 176% annualized. Okay? That is how you make money doing the option strategy, the wheel strategy with Palantir. This works if you don't have 100k, you can half this and you'll still come away with over $1,600. There's loads of ways that you can do this, guys. Okay, you don't need $100,000. I just kept it simple because if you are looking to retire, it's likely you would have over $100,000. So, if you guys did enjoy the video, please smash that like button because it really, really helps. I really want to try and just grow the channel as much as possible because I just believe that what I'm providing is key information, and I feel like a lot of you guys would like it if I keep producing more income producing videos and more videos on options. And the options that I'm doing, like the strategies that I'm doing and implementing every single day, and my trades, that you guys can follow them on the channel. So smash that like button, and I'll see you at the next one. Peace.